Hello everybody, and welcome back to the Costing and Pricing Learning Program. My name's David Gilchrist, and this is webinar number 13. In this webinar we're looking at costing volunteer time and also donated assets. Before we go to the main part of the webinar though, I'd just like to remind everybody in relation to the copyright, this material is available to be used for any educative purpose, but there are copyright rules related to it, so please go back to either webinar 1 or to the website in order to make sure you understand what those copyright requirements are. The second thing I would like to do is just confirm the navigation. The previous webinar, webinar 12, was costing and pricing for volunteer directors, and this webinar, of course, as I mentioned, is webinar 13, costing volunteer time and donated assets. In this webinar, we're looking at costing and pricing of donated assets, but not actually the physical costing and pricing, if you like, but some of the risks and rewards associated with costing and pricing of donated assets and volunteer time, and also how you might go about that process. But before we do that, we need to remember the issues around costing and pricing and how we actually undertake that. Firstly, what does it cost to provide a service is the fundamental issue that we're still trying to grapple with in this particular webinar. When we have donated assets or when we have volunteer time, we do have, if you like, a philosophical question around whether or not there should be some costs costed into the price of services provided, taking up those particular consumptions. Remembering that any cost is a consumption by an organisation in using their resources, their capacity, any of their goods or any of their time in actually providing a service. And though therefore, while it might seem a little bit strange perhaps to be costing particularly volunteer time into a service delivery outcome, clearly the use of a volunteer for one purpose negates the use of that volunteer for something else. In other words, in order to provide a service using a volunteer, there is a requirement that an organisation make the decision to use or consume that volunteer time for that particular service rather than doing it in using that capacity or that resource for some other purpose. So in that case, we do need to continue to think about what does it actually cost to provide a service. We also need to think about what donated assets and the contribution of volunteers should be included in terms of cost in that overall cost and price, and also we need to consider how we might include those elements. Firstly, the basics. Remembering webinars 4 and 5, we actually talked about costing and pricing and the general principles associated with that. In this particular webinar, as I mentioned, we're not going to go back to those basic costing and pricing processes. What we're going to do is talk about how you might consider the issue of costing in particularly volunteer time into service delivery costs and prices. In that case, the principles remain the same. That is, the issue is whether costs related to volunteers and donated items should be included, and if so, at what costs. Remember, this is relevant to the establishment of a cost and a price for each service. Therefore, the accounting issues relative to how to record and report on costs is a separate issue to that of costing. I raise that because at the end of the day, there is already within the not-for-profit, the broad not-for-profit and charitable sector, a lot of discussion about how you might, for instance, include the value of volunteer time and donated assets into the profit and loss for an organisation. We're not particularly interested in how these kinds of things might be recorded and reported, if they should be recorded and reported at all, but rather we're interested in how we might apply some form of costing to these particular items to ensure that the full cost and price of our service is reflected of them. Remember though, with pricing, and ultimately costing is focused on arriving at a price for our services, price equals cost plus markup. We're very interested in that costs element at the moment, and as you know, including volunteer time and donated assets in that element. So I guess the first element is then, or the first issue for us is, what does it cost to provide a service? Costing and pricing is about what resources are consumed in providing that service, as I've said before. And so the key question is, should that volunteer resources, or resources that are not actually physically paid for, that we don't actually provide a cheque for, be included in the cost and ultimately inform the price for our services? Should we include donated assets in the contribution of volunteers? Clearly there is a philosophical issue. There are some risks associated with both including those items and the idea of not including those items, and there's also an opportunity for us to, if you like, think on some of the things that we might consider in making our decision as to whether to include those elements. Of course, one of the reasons that we might not include those elements is the fact that one of the reasons that we might not include those elements is the fact that we have to meet the price of a funder, so generally in this case the NDIS and the funds that are offered for our services under the NDIS framework. However, the philosophy that's been taken in the development of this webinar, and indeed the whole series in the Costing and Pricing Learning Program, has been around really understanding the true cost of service delivery, our targeted price, and then of course comparing our targeted price with the price achieved in order to consider the pricing gap. Therefore, some of the risks might be related to, if you include volunteer time, then obviously your price and cost base is going to go up, and that might, in the first instance, appear that you're uncompetitive or unable to recover those costs. On the other hand, you do need to think through, in terms of the philosophy, about whether or not the true cost is being displayed and indeed reported to funders, to ensure that the funders understand that you're actually contributing volunteer time and resource into the provision of a particular service. Therefore, one of the risks associated with not including donated assets or contribution of volunteer time into the cost of your service is, of course, the mispricing of those services. In other words, you're actually providing a service at a lower cost than the true cost of service delivery. The second big risk that's important to consider in that context is the idea of future-proofing, and whether or not contracts or prices that you set that might not include some value for volunteer time particularly might misrepresent the current price, but also might leave your organisation at risk in terms of future changes in circumstances where, for instance, you're unable to recruit a volunteer, or where the volunteer costs actually escalate but haven't been incorporated in the original base price. Therefore, you need to have, at worst, an understanding of what those costs are in order to be able to respond to prospective risks associated with the future costing and pricing of your organisation. One of the things that is really also important here is perhaps going back and looking at what the history of your organisation tells you in relation to how you might make this decision, and whether indeed volunteer time particularly makes up a significant component of the service delivery resource that's available to your organisation. If it's an immaterial amount, that is a very small amount that's really not going to make a difference whether you cost it or not, then it might be necessary or useful for your organisation to determine not to actually cost those items in order to avoid the complexity and the difficulty associated with costing and pricing. However, if it is determined that history tells you your organisation does rely on those kinds of resources, then the risk is of course escalated, and you need to consider that in the context of your operations. However, one of the things that's important to think about is whether or not there's actually a halfway house, or how you might make the decision in terms of the considerations. In that sense, we would include three types, if you like, or three elements, three approaches to costing and pricing in terms of volunteer time and donated assets. The first, and probably, if you like, philosophically the most aligned with the costing and pricing learning program, is that of full costing, and in essence where you actually put all of the costs associated with volunteer time, including estimates of the true cost of that or value of that service, into your costing and pricing estimates. You might undertake marginal costing, where you look at some of the additional costs that you incur and make sure they're included in the cost of service delivery, or simply cost recovery, where you just simply look to recover those costs that you actually incur as a result of providing services from a volunteer perspective. Full costing, the sources of data are fairly much straightforward. They're the same sources of data that you would use for human resources in other forms of costing. However, the main issue that you need to consider, of course, is what the proxies for those costs would be. In other words, how do you work out what value you're going to ascribe for, say, a trip for a volunteer driver or an hour's voluntary service for someone working in your office? The proxies for costs usually include things like awards for like employment roles, and also for the costs of human resources within your organisation. Be sure, though, to include things like on costs to ensure that you cover not only the prospective costs of the actual time, but also the other costs that would be associated with employing a person to undertake that role if you didn't have a volunteer undertaking the role. Again, it seems perhaps a little bit strange to be costing the full cost of a volunteer hour into the cost and price of a particular service, but you've got to consider that should that volunteer no longer be available, or should that volunteer need to be replaced by a paid staff member, then you need to have those costs taken up in your price to ensure that you are future-proofing your organisation. The other way to consider the full costing or sources of data for full costing is perhaps marking to market. In other words, working backwards from the price of a commercial service or a typical service that might be fully staffed by paid employees, and to work backwards from that point in order to identify the full costing for a particular service. That's probably a little bit more difficult in many respects. However, it is another way to consider how you might arrive at the cost of service delivery in this particular circumstance. Marginal costing, on the other hand, is used where an organisation decides not to include costs for each iteration of service delivery, but doesn't want to be out of pocket for incidental expenses associated with the recruitment, the selection, the management, and the deployment of volunteers particularly. So you want to, in this type of arrangement, insure yourself against the risks associated with use of volunteer labour, and you might, with marginal costing, reduce those risks, particularly by looking at history and seeing how often, for instance, you've had to use paid staff in service delivery where typically you use a volunteer. So in other words, rather than full costing for each hour of volunteer time, you might cost for your expected amount of time that volunteers may not be available and you have to pay full-time staff. In other words, this inclusion is a little bit more like an insurance policy that allows you to collect resources along the way of service delivery against the day where you have to pay for those particular staffing hours particularly. So when we talk about marginal costing, there's a number of things that should be included. With full costing, i.e. the previous process that I suggested, it is a normal process, the same as any other costing. The only difference is, of course, you need to proxy or find a value, establish a value, agree on a value for a particular hour of service or an iteration of service provided by that volunteer, and then to work through the on-costs and everything associated with developing an actual cost for that item. With marginal costing, we typically then look to include the cost of replacement staff where volunteers are not available, and again, history is always important there. We look to include the insurances for deployed volunteers, so all volunteers or all organisations that deploy volunteers should have insurances associated with those volunteers to make sure that obviously from a workers' comp and professional indemnity and other perspectives the organisation is covered and the staff are covered, but also you need to include in that marginal costing arrangement the cost of managing the volunteer pool, communications, volunteer managers and staff, so your managers and staff that are actually employed to manage the volunteer staff and recruit and retain those staff, and also things like Christmas parties and all of the add-on costs that are associated with thanking volunteers for their work and keeping them interested in your organisation. Therefore, those costs of recruiting volunteers and soliciting donated goods, etc., under a marginal costing arrangement would be incorporated. What would not be incorporated under a marginal costing arrangement are a cost for each hour of service delivery. Once again, we're only looking to cost in the potential for replacement staff where volunteers become unavailable. Finally, cost recovery is the third suggestion in terms of how to approach this. And remembering that we make no recommendation in terms of which of these elements that you should undertake. However, you might consider actually looking at each element and seeing how, or each style of costing, and seeing how that works out from your position so that you understand your organisation's risk associated with the future impact of losing volunteer time particularly. Under the cost recovery arrangements though, this process is really designed simply to allow you to cost into your organisational costing and pricing matrix those costs that are associated with the recruitment and the associated costs, including volunteer pool management, etc. However, in cost recovery, so it's very similar to marginal costing, under the cost recovery arrangements, rather than costing these costs direct to a particular service as a direct cost, we talk about actually costing these as overheads. Now this can be a very useful and easy thing to do because typically these costs are already included as overheads within organisational cost structures. So the Christmas party, the communications, the volunteer managers and the staff, paid staff associated with managing the volunteer pool are all costs that are typically included in overheads now. However, you need to consider under cost recovery arrangements as opposed to marginal cost recovery whether or not the volunteer time is specific to a particular service or it's more generally used across the organisation. In terms of the former, that is the marginal recovery or the marginal costing arrangement, our expectation is that the costs of the volunteer time are associated with the specific service delivery. So for instance, with a motor vehicle fleet and a transport service, a volunteer driver is clearly associated with providing that particular service, and therefore philosophically that costs associated with that volunteer should be undertaken using marginal costing. However, if a volunteer sits on the head office reception a few hours a week, perhaps that cost is better associated with overheads. Remembering that if the cost is associated with overheads as cost recovery process suggests, then that overhead will be sent across or allocated across all of the services that are provided by the organisation, and therefore, if you like, the marginal impact is going to be a lot smaller and a lot more easily absorbed by each service than perhaps the marginal costing or direct costing that we talked about under the previous arrangement. In terms of donated goods, so most of the comments that I've made have really related to volunteer time. In terms of donated goods, it is very unusual, as you can imagine, for donated goods to be costed into activity costs and prices, that is service delivery. And this makes sense from a number of perspectives. One of the key perspectives is that by and large, most donated goods are donated on the basis of the fact that those goods are then going to be applied as the, if you like, or allocated, if as you like, the service in itself. So, for instance, St Vinny's or one of those, or GSI, one of those organisations that actually collects second-hand goods and then donates those or provides those goods into a shop or into some other element of service delivery, doesn't typically cost those goods, because unless they've got the goods they can't provide the service, and therefore the goods themselves, if you like, become the service. However, where it does make sense to value donated goods or to cost those donated goods, particularly where, say, a good is donated for the provision of a service, and I'll go back to the transport example where it might be the car salesman or a car seller provides a car, donates a car to your organisation to assist in the transport service, then under that arrangement those goods should also be costed into the provision of service cost and price for your organisation under one of the, essentially under one of the three methods that I've already identified. However, if it is specific to a service, then it should be costed into that that specific service at a proxy price or a proxy cost that should be akin to the actual purchase or lease of that vehicle, for instance. So again, it's unusual for donated goods to be costed into activity costs and prices. However, where you do want to cost those elements in, you should use the market. You should always be asking the question, what happens if no goods are donated? That is, if you don't have a donated good, does that mean you simply don't provide the service, and therefore the costing of that good into the service doesn't necessarily make a lot of sense? You should also include, though, in terms of those costs, whether there are any costs that should be included that are incurred in soliciting donations and managing their collection and storage. So where it does make sense for you to be costing donated goods into your service prices, then you need to take into account their full costs. If your operations only relate to the distribution of donated goods or the redistribution of donated goods, then it's those on costs that are really the centre of the costing and pricing question for you. In other words, it is those soliciting costs and the management of the collection and storage of those assets that is critical to your costing and pricing for the provision of a particular service. Finally, it is really important to come back to whether or not those goods are part of the provision of a service or a service in themselves. If the goods are part of a provision of service, again, if you like, it's part of the philosophy of the Costing and Pricing Learning Program that really those goods should be costed into, or the value of those goods should be costed into that service to arrive at a price that allows you to reduce risk and future-proof your price. Again, remembering that just because you have a target price that you have costed and incorporated all of the true and marginal costs associated with things like donated assets and volunteer time, doesn't mean that that's the actual price you'll be able to charge, but it does give you a good indication of the true cost of service delivery. Remember, donated goods are also have a question mark over them in terms of how they're reported from a financial reporting perspective, and we're not talking about that. So organisations don't necessarily have to cost donated goods and report those costs in their financial reports, their financial statement or profit and loss. Rather, we're simply focused on how we arrive ultimately at that target price and whether or not the value of donated goods should be incorporated in that target price in some way, shape or form. So in conclusion, I just want to go through and ask you to remember that when you're costing and pricing volunteer time and donated assets, or making the decision as to whether or not to undertake that particular process, you need to ensure that you understand the risks associated with costing and pricing in this particular area. So the risk associated with including or excluding these costs, and primarily these risks relate to two things. The first is that the volunteer or the donated good is no longer available and has to be purchased. If you have a contracted price that doesn't include a provision for that eventuality, then the organisation is at risk. And it's up to, of course, the organisation, the CEO and board, to determine the extent to which that risk is going to affect the way they make decisions in this regard. When you decide to actually cost and price that volunteer time or those donated goods, you need to ensure you're consistent with regard to the application of cost estimates and processes. Particularly, you should use the same costing and pricing arrangements for donated goods and volunteer time as you do for all of the other costing and pricing exercises that you undertake in your organisation. The only difference is that ultimately that cost is proxy. That is, that we need to, because it's volunteer time or donated goods, we need to come up with a proxy for the cost of those goods to include in our calculations for cost estimates for our organisation. We also need to consider the inclusion of these costs in the context of the materiality of the impact of their inclusion or exclusion has on overall costing estimates made. So, for instance, if you consider the cost recovery process, I mentioned that under that process these kinds of costs associated with volunteer time and donated goods would be undertaken as overheads across the broad organisation, and in that way they can perhaps be absorbed in a very immaterial way across your organisation's services without affecting a particular service. However, if volunteer time or donated goods are germane to a particular service and central to that particular service, it is probably fairly important to at least undertake the costing and pricing of those elements to judge the potential risk associated with losing that volunteer time or those donated assets at some point in the future. The final point I'll make is to simply reiterate that you should perhaps, particularly in the first instances, look to cost and price using the full costing regime, the marginal costing regime, and the cost recovery regime to see what potential impact that has on your organisation's prices at the end of the day, and to experiment, if you like, between those three regimes to before you make a decision about whether or not you include volunteer time and donated assets costs within the costing and pricing basis of your particular services. That concludes this seminar. As always, we're very happy to get both questions and comments in relation to this seminar, this webinar rather, or any webinars associated with the Costing and Pricing Learning Program. And once again, we suggest that you go back to the Costing and Pricing Learning Program and look at all of the webinars and other materials that are available on the website. Please feel free to send anyone in the Curtin Not-for-Profit Initiative an email with any comments or queries, and indeed any topics that you would like to see undertaken in future webinars or in future materials development. In the meantime, all the best, and I look forward to talking to you soon.